so with all the story about what the U.S. Fed will do in 2019, Jerome Powell, the head, the Fed chairman, and two of his former colleagues, Janet Yellen and Alan Greenspan, had a bit of a conversation on Friday trying to calm the nerves of investors, not just in the United States, but around the world, sounding a bit more dovish, says the FOMC, that's the Federal Open Market Committee, will be a little bit more patient this year about interest rate hikes. That's all part of what we've been watching here in Nigeria, what the United States would do in the new year. Meantime, China just called its bank's reserve rate, what you call the CRR, by 1% on Friday, injecting 1.5 trillion yen into their own banking system or the credit market for onward lending to the economy. So on these two biggest economies around the world, what do we find in the middle here for Nigeria as we look to the first monetary policy meeting in about 2 weeks from now? Let's get a bit of some sound bites around this and what it means for the markets with the chief economist at Vertiva Capital Management. Michael Famoroti is live to us on Skype. Good morning, Michael. It's good to have you from downtown Lagos. Hope you had a very nice weekend.
I did, very much. Pleasure to be here as always.
Man, you're looking really good, man. You've had a lot of time to sleep over all the political and trade war shenanigans between Washington and Beijing and the border war with Mexico and all of that.
Yes, of course. Thank God for that.
So, were you encouraged by what we heard on Friday from Jerome Powell, Alan Greenspan, and Janet Yellen, three Fed chairmen who put heads together and tried to calm the nerves when we saw those very brutal first trading days of 2019 in terms of where the U.S. Fed is going with Fed fund rate in the new year?
Yeah, I think for the first time we're seeing a bit of uncertainty over the short to medium term direction of U.S. monetary policy. So the question of whether the Fed has been tightening too quickly, too soon, and whether it's being overly hawkish with its near-term monetary policy has really come to the fore. And just like you said, the market has been reacting quite strongly and expressing very strong views about the fact that it thinks that U.S. policy is too tight. Obviously, for Nigeria, any reversal or slowdown in monetary tightening in the U.S. would be good news. I do still think that we're going to see continued rate hikes, perhaps at a slower pace than initially expected. The Fed, as at last estimate, suggested about 3 rate hikes in 2019 and 2 in 2020. Perhaps we will see 1 or 2 of those rate hikes off the table.
Okay, so with what we heard on Friday, do you think it is time for our own MPC to lower his guards, as it were, and go perhaps a little bit dovish as well, just to get to be a little bit less hawkish in the new year? Do you think it's time already, or do you think we have some peculiar domestic nuances to deal with?
Yeah, I think we definitely have domestic headwinds. I'm looking in particular at election spending, but also at the implementation of a minimum wage hike. I don't think it will feed through to prices that significantly in 2019, depending on when the bill is passed. But definitely in the medium term, a hike in a minimum wage would, feed inflationary effects and give challenges that we're still having on the inflation front. I don't think it would be prudent. Also, just to mention, the central bank is determined to continue supporting the currency, and lowering interest rates would counter that. So I think when you add up everything, it's pretty easy to see that the MPC is unlikely to go down a dovish route this year.
Okay, so what should we do? How do we trade our current political environment, of course, with all the dirty politics, partisan politics taking place on every day, every minute, every hour, on social media, wherever it is, in our local environment? Do you think there's the spot here where investors can place their foot, as it were, trying to navigate the bombshells all around?
Well, there's a famous saying about the markets that when there's blood on the streets, that's when you should be buying, right? So there's a lot of uncertainty. There's a lot going on politically, but this really is a time to take position. This is a time to look at particular markets, particular companies and industries, and place your bets on the ones that you think make sense in the medium to long term, right? So prices have been beating down. They will probably continue to be beating down as well. Similarly, in the fixed income market, we're seeing a higher yield environment. So this is a time for those who dare to do.
Okay, Godwin Emefiele, the head of the central bank, will have his first 5 years being wrapped up by June. So what's your assessment?
I think it's been a very interesting time, definitely defined by the 2015 to 2017 currency crisis. I still don't agree with how the situation was managed, but thankfully we partly redeemed ourselves with the introduction of the NAFEX window in 2017. I think he would be quite intent on ensuring that he maintains Naira stability before June 2017. In terms of his continued stay, it's difficult to see just because previous trend has suggested that that seat is one that presidents generally like to replace once the tenure is up. But yeah, it will be interesting to see how Q2 plays out because we expect a lot of pressure on the Naira, and he has made it clear that his strategy is to defend the currency using external reserves.
Yes, so if you look at all the president's men since 2015, when the current administration took over, Emefiele seemed to be the one who's, some of what he's done seemed to be part of the playbook of the government, whether it is FX, whether it is Anchor Borrowers Program, where whatever that is, trying to, 41 items, now 42 items. So do you think it's done well for the administration?
I think, yeah, in terms of alignment with the policy goals of the federal government, yes. There was a time in 2016, perhaps, when there was, or 2017, I can't remember, when there was a bit of a disjoint between fiscal and monetary policy. So the fiscal authorities have been calling for lower interest rates, but the central bank was intent on keeping interest rates at 14% to support the currency. I think that's the only time where we saw a bit of a friction between the fiscal and monetary side. Beyond that, just like you said, he has actually, well served this current government policy goals.
Okay, so what's your playbook at Vertiva as far as the monetary policy and the market is concerned for the year?
So like I mentioned, for monetary policy, we think that the headwinds on inflation and the desire to prop the currency suggests more hawkish as opposed to dovish monetary policy. For the markets, we expect things to be calm up until the elections. We anticipate a bit of a rally, but we do think that the rest of the market year would be defined not just by who wins, but also the nature of the elections. We are cautiously hopeful that we will see even more progress in terms of our democratic stripes, and the elections would go even better than 2015. And if that happens, then we anticipate a little bit more joy in the market, even though the economic and external fundamentals will not change much for most of this year.
Okay, we'll check back with you, Michael, on you say the saying is that when there's blood on the street, that's when to buy. I'm sure a lot of folks are eager to hear from you what to buy in the new year. But let's just keep that under the table, shall we? Let's keep it there and keep them begging for more. Until they see you next time on the show. Michael Famoroti, thank you. A very bright day, and thanks for starting the week on the market street for us and the monetary policy outlook from the central bank in the new year. Of course, part of the new year is our fixed income market. The debt market has been roaring, as it were, if you know how to read the yield curve. Short-dated treasury bills, treasuries maturing 17th of January on Friday. We're trading nearly 16% at the FMDQ. OTC, Securities Exchange platform, that tells you that a lot of activity is going in there. with the central bank on one hand, and of course respecting the debt management office to join in the next 1 week or so with the first Naira bond for the year, and of course the savings bond, the Naira savings bond, which is a monthly retail market for retail investors, which of course gives you a yield of about between 13% or thereabout, 15% as well from the debt management office. All of that will be part of what you see. But let's get a bit of a sense of what to expect for this new full trading week from FMDQ Exchange Place, from Access Bank. This is Gbenga Shonaike, who is a fixed income dealer, talking to us. Gbenga, you good to go?
Good morning.
Are you good to go?
Yeah, I'm good to go.
You're good to go. So, what's the outlook for the current week?
To be honest, it's really going to be a very quiet week. So what we're seeing is that a lot of participants are being very cautious as to what to do. As we know, it's a new year. Elections is in about a month's time. So we really don't want to take any knee-jerk reactions. So we're seeing a lot of cautiousness, a lot of planning, a lot of people doing a little bit more research in terms of what to expect going forward. So really, that's what we are seeing play out in the fixed income market. So it's been a slow start to the year. We saw a bit of yield decline last week. Yields went to low at 15.2, 15.3 levels. On the average, about 15.354 across board, but we still expect a little bit more cautiousness. We don't see any yield trending upwards, and given that CBN has been able to maintain their interest rate stance, especially as mopping up excess liquidity on the day-in, day-out action, so we don't expect much to happen. We just expect people to be a bit more cautious going forward.
So why is the 17th January 2019 Treasury bills trading around almost 16% on Friday, 15.85%?
So like 17th of January bill is a 2-week bill. So really, there's really not much loss or profit that can be made on that bill. So that's more of a liquidity raising perspective. So really, given CBN's OMO auctions, and sometimes you can see that they do special OMO auctions where they kind of engage banks that, okay, you have to buy these bills at 15% at this volume. So we're seeing that as a liquidity raising stance. So the best way to raise those liquidities is by selling short-dated securities. Very short. And that's about 2 weeks maturity. So really, that is just...
So if I'm edging and I'm playing, if I'm edging and I'm playing the political uncertainty, technically between now and the end of May 29, where should I put in money here? Mid-level paper, long-end paper, or stick with the short-term, take it and put it in my back pocket and zip it up?
Basically, you would still play within the Treasury bill space, so that's medium to 1 year paper really isn't that bad, to be honest. So a long-term paper at 15% really is a good investment opportunity, but really you typically want to stay away from the long end of the curve. That's basically bonds, really. So for medium to long-term papers is really where you should stick to, given the level of uncertainty as regards the current elections.
Okay, Gbenga Shonaike. I do have a profitable week ahead on fixed income space. Thank you so very much, Gbenga Shonaike, fixed income dealer at Access Bank Nigeria PLC, live to us from FMDQ Exchange Place. If you think Nigeria is yes, you don't have to think, but Nigeria is the biggest oil producer in Africa, about the number 7 globally. But in terms of oil export per capita, that is per person, but 180 million Nigerians per each one of us, we're not the best. In fact, Gabon, which is a very small country, if you haven't taken time to check your Google map, just check where Gabon is in West Africa. On the map, you hardly miss it because it's just somewhere there at the top northwest of the map. But that country is doing 10 times in terms of exports per person of oil than Nigeria, producing 200,000 barrels per day. We do 2 million barrels per day, and we're not the best net exporter of crude oil. Let us think in. We'll be back in 2.